Welcome to the Jungle Savages. My name is Baloo the Bear, and if you want to get better at timing market bottoms and timing market tops, then you should learn the Wyckoff method. It's exactly what we study here. We're going to take a look at the cryptocurrency market. I want to take a look at Bitcoin. We're getting ready to close out the month. We got 24 hours left in this monthly candle. Well, not even 24 hours left. We got 16 hours left on this monthly candle close. Very interesting candle. Not the best picture, if I'm being honest. And then we'll take a look at Ethereum and the DXY, the dollar currency, the dollar index against other fiat currencies is putting a lot of pressure on financial markets globally. So we'll go ahead and take a closer look at that as well. So if you are new here, I want to invite you to subscribe, hit the like button if you're watching on the replay on YouTube. And if you're on Twitch, hey, follow along, subscribe if you got an Amazon Prime membership, and without any further ado, iced coffee in hand, let's go ahead and take a look at the king of all crypto, and that is Bitcoin. All right, so we're going to start out, like we said, we're getting really close to the monthly close here on Bitcoin. So let's zoom in. Let's talk real shop here. So this candle, this area here of concern, we are consolidating here on the monthly time frame. So we got a nice big red bar, green bar, red bar. It didn't form a new low on August's bar, but here on the September bar, we have kind of a spinning doji. We have a doji candle. It's an indecision candle, but the negative part of this candle is it's going to be printing a new candle body close at a new low on this monthly chart. So you can see how we formed a little bit of a base here. We're currently below that right now as far as the candle body close. So it's not going to be a very good close. Granted, we do have 16 hours left in the close. Potentially, we don't have to rally too far. I mean, we basically just need to get above what is the open on this one. If we get above 20 grand in the next 16 hours, which is a $500 move, it's not impossible. If we can do that, then we can certainly salvage the bearishness of this candle. But to print a new candle body close as a new low in this local range would not be an ideal circumstance for the price of Bitcoin. And I would expect further downside levels if that was to end up being the case. So 16 hours, $500. Let's look between the couch cushions. It should be doable. I just want to point out, the trend is your friend until it ends. Okay, we say this quite often on the channel here, and a lot of people, they talk in terms of network adoption and how every cycle is a little bit different, contracting volatility over time, blah 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 blah, lengthening cycles, a whole bunch of shit, but they don't really back it up with any data to support it. And what we have is, typically speaking, at least in the last two cycles, we have seen 80 to 85, well, we've seen over 85% corrections in the last two cycles. So the assumption is this cycle will experience an 85% correction because it has in the past. Why not in the future as well? Nothing changes until it does. So until we can prove a bottom, until we can rally off of this level and go to higher levels, we need to assume that there is a little bit of wiggle room to repeat what we've done in previous cycles. 80% washouts in markets are usually where large institutional investors and savvy individuals begin to think that the asset is very undervalued, and they begin to accumulate in large quantities. But while we're sitting at around 70%, they might wait a little bit longer for a little bit more of a flush out. So I just want to draw your attention to the previous cycle here on the monthly chart. From the all-time high, the $20,000 high in 2017, we did have an 85% retracement to the bottom of the market cycle bottom. But what's interesting as well, bottom isn't proven until it's long in our past. Yeah, and we'll cover accumulation in just a moment. But what's interesting here is, the narrative, if you were around in 2017, 6,000 was the floor. Everybody knew 6,000 was the floor. The floor was in. Mike Novogratz, the floor was in. Everybody was saying the floor was in, except for Tone Vase that was saying we needed to go to $1,000. but everybody was saying that the floor is in. There's a lot of people sharing that same sentiment now from where we are currently, and funnily enough, at this current level, it just so happens that we're at that 70% retracement level. So right here, sentiment was very convinced that 70% retracement, that was the floor, that was where we were going to rally off of. That's where we began to form some structure and a little bit of a hint towards a bottom. We formed it, you know, granted, it certainly looked like a bottom. If we go to some smaller time frames here, we'll go to the weekly. If we go to the weekly back then, you know, it really looked like a bottom. We had kind of this a very well tested floor. Let's show you exactly what I mean here. We had a very well tested floor here, and we tested it several times, and people were like, yeah, bottom's in 100%, the bottom's in. But when we actually formed here was a little bit of a descending triangle, which is a bearish formation. Descending triangle at a 70% retracement level. Let's take a look at modern day here. We got a firm floor here. Where's my line tool? Right at that 70% retracement area. And we're forming a little bit of a descending triangle as well. Granted, it doesn't have as many touch points. I guess you could say you could do something like this. Either which way, it's a descending triangle. You have a series of lower highs. It is very different in structure, granted that, but you have a series of lower highs as the resistance point up here, and you have a flat line of support down here. And it's happening at that 70% retracement level. So kind of interesting correlation there. We could be potentially looking for further downside if this is to kind of reach the same levels that we've reached in previous market cycles. So let me just remind the viewers of what that looks like. Oops. Get rid of that. You know, we finally had our big capitulation right down to around $30,000, $3,200. What was it? What was the final low here? The low was $31.22. So, you know, around $3,200 was the low there for about an 85% correction. And we've been talking a lot around, you know, talking about this level right here at the previous breakout at around this level right here. You know, we formed a lot of structure in the previous market cycle back here, so that would bring us right at around $12,000. So we do have room, and it would fit nicely in terms of the percentage points lost for the market cycle. History does not have to repeat itself, but it often rhymes. And I think that from a sentiment point of view, a lot of people are convinced that the bottom is in, and the longer that we stay here, a lot of people are getting very comfortable with the notion of potentially that there's a floor at this level. I maintain a very simple approach here. You know, while we're in the markdown phase of a Wyckoff distribution, which we currently are right now, we're in markdown. While we're in the markdown, lower highs and lower lows, there's no point in assuming that the floor is in until you can break that structure and trade sideways through it. And yeah, we can take a look at that here on the daily chart. So taking a look at Bitcoin on the daily, this is the index chart. We're inside this descending channel, and this local consolidation right here doesn't have a ton of characteristics that show bullishness, at least not to me. You know, when you see stuff like this, you know, you have an overthrow of the trading range that kind of falls back into the range. You get a very severe rally and then a rejection, like an upthrust type action here. It's not showing a lot of characteristics that I would put under the category of accumulation. Accumulation is good. Accumulation is how you can begin to build a base. And there are certain characteristics of accumulation that are noteworthy: a tightening of spread, tightening of volatility, tightening of volume. And here we're seeing a lot of volatility. We're not seeing a tightening of the spread. We are seeing upthrust actions and increasing volume. which, you know, is probably confusing a lot of people, the increasing volume, but I'm not going to get into volume analysis right now. I don't like the volume pair of the technical structure of this consolidation. So if I was to pick a side, I do think that we are going to have some more downside. Short term, we absolutely can rally. We talked about this on the last stream. We could get a rally in the short term, but I'm not interested in the short term long exposure potential in a bear market. I'm only concerned about long exposure when I think that we are in a bull market. So even though there is a possibility of us getting to the top of this range here for about a $2,000 move, I'm not interested, and I do think that that there are further downside levels to be hit before we can really begin to start our accumulation phase. DXY, higher highs and higher lows. Trend is your friend. Do not fight it. We've been talking about this for months. We've said, you know, as long as it maintains this structure of higher highs and higher lows, guess what? It's going to continue to make higher highs and higher lows, and trying to go long on anything is going to be very difficult for you. That's exactly what's happened, and we're starting to get really feisty here with the DXY. Again, we need to break below this line. We need to break below this structure for us to begin for us to have the opportunity to begin any sort of meaningful consolidation in any market, whether it is the commodities market, whether it is the stock market, or whether it is the crypto market. It does not matter. As long as this is in an uptrend, it's going to be very hard to be a bull in any market that you choose right now. So we do need to get that break below. If we get the break below, fantastic. Until that happens, the assumption is more moon for the dollar, more moon for the dollar, which is not going to be good. Not going to be good for mostly anything. Speaking of the S&P dancing with fire here, dancing with a dangerous critical level. This is not an area that we've played with very often. If I go to the weekly chart, we can see that in this channel, the primary area that we've spent a lot of consolidation is in the upper half of this channel, where we've spent a few times in the lower half of the channel. And when we go to the lower half of the channel, there's usually kind of a climactic high volume event that causes a lot of panic in the markets. So I don't want to see that, but we're getting very, very close to some critical levels breaking here on the S&P. Let's zoom back into the local area. If we get below 362 with some candle body closes, we're at 362 right now. It's not going to be very good. Same sort of story here on the NASDAQ, really keeping a very close eye here on this area that I have labeled shakeout, from the buyer's climax down to this shakeout level. If we start closing candle body closes below 11,000, it's going to get ugly, in my opinion. I could see this heading down to much lower levels. So, you know, if we see that kind of breakdown in traditional finance, you better believe we're going to see that breakdown in crypto as well. Thank you all for joining into the live stream. If you're watching the replay, don't forget to hit the like button, hit the subscribe button, and share this with anybody that you think might find some value out of it. That's all I got. Please trade safe. It is a jungle out there. Peace.